begin with the part A, question A, which is MFRS 8 introduction. So MFRS 8 operating segment was issued by MASB, Malaysia Accounting Standard Board, in November 2011, and it was applicable for annual period beginning on or after 1st January 2012. The objective of MFRS 8 is require entity to disclose information about their operating segment, product and services, geographical areas and major customers. It helps users of financial statement to understand the nature and business activity for them to make decisions. The scope of FAR570 is company must be publicly listed, entity whose debt or equity instruments are publicly traded, or entity that are in the process of issuing such instrument. For the core principle, an entity shall disclose information to individual users to evaluate the nature and financial effect of the business activity and environment in which it operates. Next is quantity threshold. Quantity threshold is after determine the operating segment, which is segment reviewed by CODM. Reportable segment will be determined based on quantity threshold. There are three criteria to determine. First is revenue. Threshold must be more or equal 10% of combined external and internal segment revenue. And second criteria is profit or loss. Threshold must be more or equal 10% of the greater in absolute amount of A, total profit of profitable segment, or B, total of loss-making segment. And third criteria is asset. Threshold must be more or equal 10% of total asset of all segments. Plus, with 75% rule, if the total external revenue of reportable segment is less than 75% of the entity's total revenue, additional segment must be identified until at least 75% is covered. And now for the disclosure required. So, entity must disclose for each reportable segment. First is revenue, profit and loss. Second, asset and liabilities. Third is basis of measurement, like how segment information is prepared. Fourth is reconciliation to entity total, for example, total profit or total asset. Fifth is geographical information, like revenue and non-current asset. And lastly, information about major customer, such as any customer who owns more 10% of total revenue.
Now let's talk about Chief Operating Decision Maker, CODM. So the term CODM identifies a function, not necessarily a manager with a specific title. It refers to the individual or group responsible for allocating resource and assessing performance across the company's operating segment. So these are the main role of CODM. First, resource allocation, performance assessments, strategic oversight, and the review of the financial reporting. For example, like AirAsia Company, the CODM is the Group Chief Executive Officer, Group CEO. Tarumalingam Kanagalingam, known as Bolingam, is the Group CEO of AirAsia Aviation Group Limited, hence the CODM of the company. As I said before, CODM can be individual and group. For Maybank, the CODM is Group Executive Committee of the bank. Currently, Group Executive Committee of Maybank consists of Datuk Farid alias as the President and CEO, Muhammad Rafiq American, the Group CFO, Datuk Lim Hong Tan, Deputy President and Head of Community Financial Service. So these persons are the Group Executive Committee of the Maybank as well as the CODM of the company. So now, let's talk about type of segmental reports. There are two types of segment reports. Firstly, product or service segments and geographical segments. For product or service segments, external revenues from each product and service are disclosed to show how different lines of business contributes to the company's overall performance. Next, geographical segments. External revenues from each countries is disclosed to help users understand how different countries or markets contribute to overall performance. So as you can see, here is the snippet of segmental reporting by Sunway Berhad. As you can see, the company disclosed the segmental report by business segments and geographical segments. It helps the user of the financial statement make a better decisions.
For part A question D, two key benefits of segmental reporting for user of financial statement. First key benefit is better risk assessment. User can identify which segment are driving or dragging performance. It helps to see which part of the company are volatile or stable. Investor can assess exposure and risk contribution segment by segment. For example, by Sandri Berhad, the report disclosed financial and sustainability data across 7 business divisions, such as property development, property investment, construction, healthcare, trading and manufacturing, quarry, investment holding. This allowing users to assess each division's specific contribution, risk and operation impact. For second key benefit is better prediction of future cash flow. Segmental reporting breaks the company into its part. For example, property, construction and healthcare. In the Sandri Berhad extract, property development and construction show very large segment asset compared to others. Example from the snippet, property development segment asset is 10.38 billion ringgit, construction segment asset is 6.15 billion. This helps investors forecast which business unit will generate cash flow. If the property market slow, investor knows Sandri's future cash flow will be more affected compared to the, say, quarry or trading and manufacturing.
Okay, next, I will be explaining about MFRS 134, which relate to interim financial reporting. MFRS 134 deal with interim financial report, which refer to financial reporting periods that are shorter than a full financial year. This means company can issue reports quarterly or semi-annually. The standard prescribe the format, recognition and measurement of preparing interim reports. For company listed on Bursa Malaysia, issuing quarterly interim report is mandatory requirement. Next, the objective of MFRS 134. The main purpose is to ensure that organization provide timely and reliable interim financial information. This helps investors, creditors and other stakeholders understand an entity financial performance and liquidity during the year without waiting for the annual report. An interim financial report should include a condensed statement of financial position, a condensed statement of profit or loss and other comprehensive income, a condensed statement of changes in equity, a condensed statement of cash flow, and selected explanatory notes to give additional context. This component ensure the interim report is clear, useful, and comparable to the annual financial statement. Next, I will explain about recognition and measurement under MFRS 134. Under MFRS 134, interim financial statements must follow the same accounting policy used in the annual financial statement. This ensures consistency and comparability throughout the year. Interim reporting is also prepared on a year-to-date basis, meaning the figure accumulate from the beginning of the financial year up to the reporting date, not as separate standalone period. In addition, revenue and cost should not be deferred or anticipated unless such treatment is appropriate at year end. This means entity cannot speed up or delay recognizing income or expense just to smooth quarterly result. There are two main approaches when reporting in interim period, the integral method and the discrete method. Under the integral method, the interim period is viewed as part of the entire financial year. This means income and expenses are recognized with the full year in mind. The advantages of this method include it provides smoother financial year performance throughout the year. It helps avoid significant fluctuation in expenses which could otherwise mislead users. The second approach is the discrete method, where each interim period is treated as a standalone period. Advantages of the discrete method: it is more reflective of the actual financial performance for each specific period. It avoids spreading or allocating costs across periods in a way that may not represent the true performance of the quarter. For the first significant event, I will explain how changes in lease term, especially when renewal or termination options are included, can affect an entity's financial positions and performance. When a company has a lease contract that allow them to either renew or terminate the lease, management must assess whether they are reasonably certain to exercise the option. This decision is important because it directly affects the length of the lease term. If the company decides they are likely to renew the lease term becomes longer. This will increase the right of use asset and the lease liability recorded in the financial statements. On the other hand, if the company expects to terminate early, the lease term becomes shorter and the asset and liability will decrease. Therefore, assessing the lease term is considered a significant event because it has a material impact on both the company's financial position and financial performance.
Assalamualaikum and very good morning everyone, and my name is Hakimi. I want to introduce about my significant event. My significant event is acquisition and disposal of property, plant and equipment, and we call it PPE. To make this practical, let's use Sunway Berhad as our company. First, acquisition. Company want to buying an asset. Sunway recently acquired land in Taman Tenton for 320 million. It's a major event. Its impact their asset on the soft P increase and their cash on the statement of cash flow decrease. And number 2 is about disposal. A company want to sell their asset. Sunway also recently sold its university campus to Sunway Red for 613 million, and its impact a huge cash inflow is shown in the statement cash outflow. And gain on disposal is recorded in the soft pearl, which is increase their profit. We go to next part. As you can see on this slide, the company Sunway we are analyzing prepare a report quarterly. The specific example here for the second quarter, which ended on 30 June 2025. This table shows us 4 financial statement and the most importantly the period they cover. This is the key concept in interim report. Okay, first, the soft P, statement of financial position. The current interim report shows the company financial position, its asset, liability and equity. On one specific day, 30 June 2025, this is then compared to comparative figure, which is the end of the last full financial year, 31 December 2024. This helps us to see how the company position has changed in the last 6 months. Okay, next, the SOPL and OCI, statement of profit or loss and other comprehensive income. This statement is different. It's cover a period of time, not just a one date. For a second quarter report, company must show 2 periods. The current quarter 3 months, 1 April to 30 June 2025. The year to date 6 months, 1 January to 30 June 2025. This is compared to the exact same 3 month and 6 month period for the previous year 2024. And finally, the statement of cash flow and the statement of change in equity, SOCI. Like the SOPL, this report show performance over a period of time. In this example, they are both prepared for 6 months, year-to-date period ending 30 June 2025 and compare again the same 6-month period from 2034. Okay, that's all from me. Thank you.